Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Greetings everybody, let's take a look again on the gold market. So as we said yesterday, the patterns, the shape of the price behavior is very similar to euro currency, but still gold has few significant changes. So we discussed it yesterday, and currently, as we said in today's euro video, we've got important detail that could really make solid impact on the situation. In this particular speaking, this is pattern on dollar index. So we have the bearish grabber on the dollar index that has been formed yesterday, and it suggests the taking out of this bottom. Correspondingly, on the euro currency, where now should be careful to consider any bullish signs that might be formed. Particularly speaking, market right now stands an important resistance, which means, and its breakout could really change the short-term background on the euro currency. Correspondingly, this pattern is also put some more bullish foundation on the gold market as well, although on the gold market we do not see yet this type of action. Speaking precisely on the daily chart, here is everything stands very similar to euro currency, as euro currency has not quite sufficient number of candles to the upside for Jordan Apple pattern, just 7 bars. The gold market also has just 7 bars, and so here we also could consider only the lookalike pattern. But for the gold, even more reasons exist that it should show upper direction in taking out of the stop. It's uncompleted major XOP target. While the euro currency has already said that it has completed, the XOP gold market is not. And this background that we see currently on the dollar index, it is even more helpful to the gold compared to the euro, and it's more needed to the gold from the technical point of view. That's what we have on the daily. Another moment that we need to pay attention to is that market hasn't quite reached the 30% support. So this is third close below, even more than third, 1, 2, 3. And within the recent 2 sessions, there's no continuation to the major 30% support. It means that we do not have here brand body buy. So potentially it might be double repo with the attempt to complete and touch the XOP. It might happen, but there's no brand body trade right now. On the 4 time frame chart on the gold, you could see the reaction on the first destination point that we see. And we said yesterday, those who have the short position need to consider taking gradual booking of the result at the strong support area. So market hits the first target, take the part of the position, close the part of the position, take the profit, move stops to the break-even or even tighter on the rest, and watch for whether market will reach the next level or not. So currently market is calling around the first support 1738, 34, 1739, almost 1740, and completion of the OP. This is agreement and the confidence support is really strong area. And take a look that response of the market to this area also looks, well, relatively bullish. So you can see some kind of the double testing of this level. So first test, pullback once again, and now market again stands in the pullback. So with the background of the grabber on the dollar index, this could mean something. It's probably the bullish background here is not bad, and theoretically, well, at least makes sense to consider ability, chance to take the long position here, especially when we have the pattern on the dollar index. Euro currency already stands right there, so it's retesting the neckline of the hand and shoulders, and in particular level that we said to watch is because upward breakout, return back on the consolidation of the previous pattern, especially moving above the shoulder, which is here at 1767 approximately. This will be quite bullish, and it suggests the taking out of the stop. But gold market hasn't quite reached it, and it's not on the way or even to it. So, and that's why with the upward action, that's the same story that bulls will have to control. So this market reach this level, keep an eye on the breakout. If this will happen, that will be the confirmation of the bullish sentiment, and in this case you could consider taking the long position. If you would like to anticipate all this stuff and you're ready to take a bit more risk, you could try to consider taking position somewhere based on this double testing of the strong support area, with placing stops slightly below the lows, because you do not need to place extended stop. Market already twice has tested this level. If breakout will happen, it will happen immediately. So that's the attractiveness of considering taking position right now, just because the stop will be very small. In general, on hourly chart, it started looking like the potential double bottom. So you can see, unfortunately, we do not have the wash and rinse right there. If we would have the wash and rinse here, this might be even much better for the bulls. But there's no wash and rinse. But anyway, here's we have some frosting action that we see, as my potential could be the double bottom here if our prediction starts right from this level. So based on the performance, we can't definitely tell this because overall reaction, you can see, well, not very impressive right there, but still some signs exist, and external factors, bullish factors, exist as well. That's why I think that the chances are not really above the zero that this really could happen. It's positive chances. The only choice that you could do is if you would like to take the long position, it's actually two options. So either to trying to anticipate this upward direction, taking a bit more risk that market could keep dropping, but in this case you will have relatively small stop, or just do not take an anticipation, wait the market will retesting the neckline, upward breakout of this area, then try and take position on some pullback, and that's possessing on a further upward direction back to the 18 even area. So these two options exist here. For the bears, as I said previously, and I repeat this again, personally I do not want to consider taking the new shorts position. Those who have it, you could just decide what to do, either to close or just to wait for a longer time, totally close or partially close. That's, I think, the options that we could consider. For the bulls, we already have discussed what to do. So the situation has become really interesting, as on the euro currency as in gold. Let's see what will happen.